So because we have Dr. Molano leaving soon, maybe I start with the question that I have for Latin America and Brazil. The question is, we have not covered it that much. You overall only said, oh, it's doing well. I don't think everybody sees it that way, and that's why we have this question. How do you see Brazil in 3 years, and do you see it coming out of the crisis anytime soon?
Well, sometimes, you know, as an economist, the times that you like to see a country is kind of when it's going through a hard patch, like right now. And one of the things that you don't like is when you see government officials very arrogant, denying, you know, that there is any kind of problem. I think that Brazil's gone through a very big transformation. It's kind of like, you know, watching a smoker all of a sudden, you know, have some kind of, you know, event. And Brazil just had a sudden death type of event. Brazil came very close to, or at least they believed that they came very close to losing their investment grade rating. The amount of pressure that came under Petrobras, that Petrobras came under, was just amazing. And Petrobras is the star of Brazil. And so because of that, I think that Brazil has been hit with a dose of reality. They're going through a very hard patch, and I'm glad that they are, because they're coming to reality. They're implementing a very draconian fiscal reform, which the government, which the president has given the finance minister a full green light to proceed with. They're going through a very thorough investigation as to all of these corruption charges, which is really a breath of fresh air for Latin America. I was in Mexico recently, and a lot of Mexicans were saying, God, I wish that would happen here in Mexico, where people actually go to jail, because there's been so much impunity with a lot of this corruption, and very senior people and very, you know, large businessmen are going to jail. And so I think it's a change. Some of these people who are doing these investigations are actually foreign trained. They're trained in Europe, they're trained in the United States, some of them even from Ivy League institutions. So I think that there is a major transformation that Brazil is going through, and it's going to go through a tough time. You know, I think that the economy is going to decline probably 1 to 1.5% this year. But I think that we're sowing the seeds for a new Brazil, what I hope is going to be a new Brazil, a Brazil that's going to be much more realistic, and a Brazil that's going to have much stronger institutions. And so therefore, I am hopeful that probably in about 3 years' time, this year and next year being, you know, tough years, but in 3 years' time that Brazil is going to come out of this very tough experience.
Thank you very much. And given that normally I would like to hear the opinion of my other speakers to the same region, so if you want, just feel free to chime in and add your opinion on it. If not, maybe another country for South America, okay, or Middle America, Mexico. Do you think the increase in Mexican-produced oil in America will result in increased stabilization in the area?
Stabilization, I wonder what they mean by that. Look, the oil reforms are, you know, a very major event in Mexico. Just a little bit of background as to why the oil sector is so important. Mexico, if you know or you don't know, went through a very bloody revolution at the start of the previous century, between about 1915 or so, and it ended in the mid-1920s. Very destabilizing type of event. Mexico is actually many countries involved in one. And there were 3 major factions that were fighting. And as soon as one faction would win, the other 2 factions would then join up and destabilize the one that was in power. And then they would just keep on going through this very, you know, unstable type of equilibrium. The solution to it came up in the 1930s, when the government decided that they would nationalize all of the major foreign-owned companies, particularly oil, and then create a huge trough from which all the factions tend to feed off of. And so that big company was called Pemex. And Pemex has, if you think of a bucket, it has all of these holes that money flows out of it. It flows straight into the unions, it flows straight into the political parties, it flows directly into municipalities without any kind of accountability. Pemex is kind of the glue that keeps Mexico, in a way, together. And so that's the reason why it's so important to do these reforms. One of them is for political and social stability. And so the reforms are really focused on 2 major areas. One of them is the sea area, and if you take a look at a map of the Gulf of Mexico and the oil rigs, a map of the oil rigs in the Gulf of Mexico, and you look on the U.S. side, there's, I think, 4,000 different rigs on the U.S. side. On the Mexican side, I think there's like 8 or 9. So there's a huge potential there for Mexico to exploit, and it's going to do so, okay, by opening up the oil sector to foreign investors. Because in 1933 or 35, when they nationalized the oil sector, they basically got rid of all foreign ownership. No foreigner can either produce, distribute, explore, or do anything in the oil sector. Now you're going to bring in this technology. The other thing that Mexico is going to do is go after the Eagle Ford shale basin. Eagle Ford looks like a thumb, okay? And it kind of starts at the border of Mexico, goes to San Antonio, and then it ends up in Dallas. But like this hand, the biggest part of the deposit is in Mexico. And it sits just south of Texas, where all those great Texans have done such a big miracle with Eagle Ford. And so what they want to do is basically lower the barrier between Mexico and the United States and invite all those Texans with their rigs and their engineers and their pipes and everything to exploit that oil field. And so right now, with what's going on with shale, it's going to be a much more difficult type of task, but eventually it's going to do so. So it is going to be a big game changer for Mexico, and it's going to be a big transformation for the Mexican economy.
Thank you very much.
My pleasure. Unfortunately, I have to go.
I know.
Metro North
thank you so much for taking the time this afternoon.
Thank you.
And a round of applause for Dr. Molano. Bye. Talking a little bit about, you mentioned oil, and I think that's a good point to carry over. Even though everybody spoke about oil, there's one more question to it. What other reasons do you think contribute to the drop in oil price? And maybe, Peter, I have you start with it. You were the first who...
Yeah, so I'd love to answer that question. I charmed by Walter's presentation, but I have to think that there was a factor that was left out of that. You know, why now? Why are oil prices tumbling now, and why are they tumbling by as much as they tumbled by? You know, was there no reality to the prices that existed over the last number of years? You know, a bubble doesn't burst if a bubble doesn't exist. And so what we've been trying to figure out over the period since the crisis existed or came into being was how inventories could be so high and rising at the onset of the crisis, and world activity, usage, was so weak, and yet prices remained as high as they did. I mean, it was a real conundrum to me, and should have been a conundrum to everybody, I think. You know, and there were others that, you know, felt the same way at the time. And so this went on for a bit, and I kept going back to my team and saying, you know, this doesn't make sense. What's going on? And we could see this in other categories as well. Base metal prices were behaving in exactly the same way. Precious metals were doing different things, but the base metals and the oil and the gas sectors were behaving that way. Well, what we postulated at that time was, look, quantitative easing is coming in, and these waves of cash don't really have anywhere to go. And so they essentially drowned the bond market, and there was still this massive search for yield out in the marketplace. So there's a lot of peripheral instruments that started cropping up at that time. And you know, one of the evidences of that excessive amount of investment on the periphery of the market was the compression of bond yields in very, very risky countries. You know, that was another evidence that there was something weird going on in the marketplace. We're now identifying more and more instruments out on the periphery of the market that were attracting all of this money. And commodities was one of them. And so there was a lot of investing activity that was actually happening in commodities. They looked like a good store of value. Remember in 2007, 2008, everybody was out there publishing books and making lots of money on how we were running out of all of this stuff. And so if you have that as a thesis, well, it's sort of everybody's game to get into. So what we believe is that for the last 6 or 7 years, successive waves of quantitative easing have perpetuated myths about prices out there, and oil is one of them. And the only moment that you will really know whether there's artificiality there is when growth starts to happen and you have to withdraw all of that liquidity from the marketplace. So that's exactly what happened in May of 2013 when Ben Bernanke came out and said, we think that we might be maybe sort of thinking about stopping this whole thing. And just with that announcement, no action at all, markets started to go into reverse. That was called the taper tantrum. And so that started, and everybody, got excited about that, and then sort of went to sleep on it, because the Japanese started putting all kinds of liquidity into the system, and more lately, Mario Draghi has been doing exactly the same thing. So it's a bit confusing inside of the marketplace. The big withdrawal hasn't yet started to happen. Well, I think that the bursting of the oil bubble is really related to the fact that people say, okay, well, growth is now resuming. That means that we need to forward price into the market the fact that this liquidity vacuum cleaner is going to be turned on. And so now, with 6-7 years of artificial pricing out there, they're saying we don't even know what the price is anymore. So they drive the price down to $40 a barrel, and they keep shorting it and shorting it. And some say it's going to go down to 30. It may locally go down to 30, but I don't believe it belongs there. It's just that's a market trying to find what the floor is. So I thought I'd put that on the table as well as an idea behind this, because I don't think that Walter's argument is enough to actually take the price from $100 a barrel and drop it down as far as it's gone. There's got to be something else inside of the system that causes that kind of bubble burst to happen. So anyway, I don't know if you guys, have any thoughts on that?
Just very quickly, I think that in the commodities as an investment vehicle is a real story. I mean, it's been the case for quite a while, so I subscribe to it. But I think that very quickly, the supply and demand had vanished actually in the analysis of oil, and there was some kind of dog that didn't bark. So the supply was growing, especially in the US and so on, but basically everybody was focusing on one single thing, which was the break-even inflation, break-even price of oil. If you look at the chart of oil was hovering between 105 and 110, because this was a price with which everybody was supposed to be happy. I mean, the level of oil prices that was consistent with more or less for every oil producer a level that would enable them to balance their budget. So the focus to me for many oil analysts was to say that the price of oil was not denominated by supply and demand, but basically by a target, implicit target for balancing fiscal balances. And of course, the big game changer to me, above all, was the total switch in the policy of Saudi Arabia. So that's why the chart of Canada versus Saudi Arabia is, to me, imports from the US is a good thing. And yesterday, we had some comments from Saudi Arabia saying that their strategy was working. So if you add to this also the sharp appreciation of the US dollar, you can find an example. But I think the big regime switch, if I might say so, was clearly the refocus on supply and demand once the story of break-even price of oil was vanishing. So that's, to me, my contribution to this analysis, actually.
Thank you very much. Rocky?
Okay.
Good, thank you. If you don't mind, I have a lot of questions about the US. I'm surprised, however, because we had such positive outlook, but there are still questions. One of them is, with excess demand in the US, has new manufacturing in the US materialized with less reliance on foreign imports? And again, Peter, I think it would be a good start for you.
Anybody's welcome to respond. I would like to turn that around. I think that demand is actually reviving. There is a deficit of demand. What I was really arguing is that, well, let's put it this way. Stimulus happens in the world economy. Every country jumped into the game, but every country wanted their stimulus to have impact inside of their own borders. And that's effectively what raised neo-protectionism inside the world. So everybody was building borders around their own economies in a way that took us backward a few years. We had been liberalizing trade and so forth up until that point. And what was alarming at that point is that, some of the greatest countries, the beneficiaries from globalization, were the fastest to erect walls around the stimulus that they were doing. So a very harmful development. I don't know. If you remember the comments that Sarkozy was making, you know, if we have multinationals in France, we want you to lay off your people in the foreign installations before you lay them off at home. Completely betraying ignorance about how supply chains work. You know, you don't make over there what you make over here, and so on and so forth. So it sounded strange what was actually happening. But it was all about keeping stuff inside of the economy. Well, I think that's what happened inside of America, and that's why America has recovered. The recovery here began in 2013, in the middle of the year. And we haven't seen the transmission of growth to the rest of the world. Why? Because, you know, there's still those walls around Buy American and so forth that are keeping that growth on the inside. So I'd like to turn that question around and say, well, what actually reverses that process? What actually breaks it out? Well, the fact that you run out of capacity is a big reason for dealing with the rest of the world, because, you know, if you're short of labor and you don't have the physical capacity to do things, you know, those economies that have spare capacity at the moment are your first stopgap. You can actually go into them and produce your stuff. You can export or import, from them to fill your own void. But secondly, you know, you have a 12 to 20 to whatever appreciation in your trade-weighted currency versus all other currencies, and all of a sudden things in other countries are that much cheaper. So the pieces are in place for that transmission mechanism to actually happen, as far as we're concerned, but it's sort of the other way around. America has grown to the point where it's using up its capacity and actually needs to go global again. That's how, sorry, whoever asked that question, I'm sorry, I turned your question around, but that's how I see the logic working. I don't know, you guys?
Évariste, would you like to add, or do you want me to repeat the question?
Yes, please.
Yes.
Because it has been turned around.
Certainly. Our economist for North America. Yes.
I'll try to answer.
Let's go. Yeah. With excess demand in the US, has new manufacturing in the US materialized with less reliance on foreign imports?
My question we'll have to turn around the question, but on the excess demand side of it, actually. So I don't get that much the concept of excess demand in the US, but basically, what I do think regarding manufacturing, it's once again supply driven. What we've seen in America is a huge supply shock, which has been tremendous in terms of course, it's been oil related, but it's also been nat gas related. So it has completely changed also the way electricity is produced and so on. So what is interesting as well, it has also led to a huge shift in the geography of production as well, because of the discovery of all the transport of things. So I think this is what made the manufacturing sector be so strong in America, on top of other things, which is basically the very low cost of labor. What is really interesting to me, especially in this recovery, globally speaking, from a global standpoint, is, I don't know if you have noticed, but in the past, the global trade used to be 3 times the level of global GDP. So when global GDP was growing at a pace of, let's say, 4, global trade was rising at 12 to 15. It's the first time in the recent past, in the last 30 years, that we've had global trade growing at a lower pace as global GDP, which means that basically the whole of the recovery has not been driven by trade, but by domestic demand and consumption. So to go very quickly, there are many assumptions on why it is happening. One positive is because investment has not recovered very sharply everywhere. And the other one, which is also stressed by the IMF, is because the outsourcing saga, I would say, that started in the mid-90s, let's say, is not over, but has decelerated very sharply. So I will not speak about onshoring. I don't really believe in this story of onshoring. I think that when Steve Jobs said to Obama that those jobs are not coming back, he was right. But basically, the incentive to outsource is much stronger than it used to be. Otherwise, in the manufacturing sector.
Thank you very much for this additional information. And Rocky, if you don't mind, I would like to add one more question about the US. It's related to the growing wage gap in the US and also Canada. What's the social political risk of the growing wage gap in the US and Canada? And I think we can expand it later to your country.
Well, you know, in downturns, there is always a wage gap that opens up. I know that prior to the crisis, there was concern about there, you know, being an increasingly bimodal distribution of income, but a downturn in the economy never helps that, because the wealthier, the capital owners and so forth are always in general much better off. And the layoffs tend to happen further down the supply chain. So naturally, you get this wedge opening up. And when an economy comes back again, you see the wedge start to be smoothed over. Well, nobody sees that happening yet. And so there's a lot of pessimism about whether that's actually going to occur or not. But I think as a Canadian, I've got an advantage over most everybody else in the world because we sort of went through our crisis before everybody else did. I don't know if you know, but we had an all-out fiscal crisis in the early 1990s. And we sort of did have ours way ahead of everybody else's, but our debt to GDP ratio prior to the crisis was somewhere around 60%, the government debt to GDP consolidated. And it zoomed up and it was going very close to 100. And ratings agencies hated that. And so they started threatening Canada with downgrades and so forth. It got a traditional political party completely booted out of existence, and new political parties came up and actually had to retool the fiscal situation. Well, during this period of time, there was a lot of duress on the economy. And so there was a whole generation of young people that weren't getting jobs. They were going back to university, getting second, third degrees, living with mom and dad and mooching off of them and so forth. And there was a lot of discourse at that time about, well, maybe it's a new normal. Have you heard that before? Mm-hmm. This is a brand new trend inside of the economy. It's never going to be like it was before. And we heard all of that stuff, and all of the structural rules of thumb inside of the economy were getting recalibrated. And I thought, we're in huge fiscal consolidation here, but that's going to be over someday. Surely we're going to come back when the government sort of gets off the back of the economy again. And indeed, that happened. And I fully believe that the same is going to happen this time around again. So in the latter half of the 1990s, we saw what was a great gulf in income distribution actually come back together inside of Canada. So that's a great test case of what we believe is possible for the world. Now, the difficulty with the world is we've been down for a long time. And so, psychologically, we can get reset inside of that. We're different investors. We're different savers. We're more prudent. It's not quite the Great Depression, but it is something like that. The difficulty is always, will we come back to the same extent? And I made a case today saying, I think the economy is looking an awful lot like old normal now than the new normal, the suppressed new normal that many think is going to be the case. And so my sense is that now is a bad time to judge that this is a permanent development inside of the economy. That wage distribution will actually start to heal itself, beginning this year and out to the next 2-3 years and on into the cycle.
Okay, so when you talk about the wage gap, you have to figure out whether you are talking about inequalities or whether you're talking about the fact that the share of compensation in the total GDP is at a historical low. So if wage gap in terms of inequality basically is just because people that are rich are not paid with wages. They are just paid by things that are related to the stock market or anything else. So I don't want to get into that much into the Piketty debate, but basically that's important to stress. The real question, and you're right, is why jobs are not picking up. You can look at the turnover, number of people that are leaving companies on their own, the number of small businesses that are saying that they are ready to increase compensation. Many surveys, the employment cost index, whatever you take, you will see that it's amazing how the average hourly earnings have remained stubbornly flat, actually growing at a rate of 2% over the last 5 years. So it raises a big issue, and I think more generally the big question now is to what extent why the distribution of income is skewed that much toward profits and so on. So I agree with you. You can have a secular stagnation approach, and basically there are some good reasons for that. You know that the power of businesses is much higher than before. You can see that the focus is about much more on productivity and rentability of capital than on growth of revenues and so on. That's what you've seen in the past. I mean, the recovery in profitability in businesses in the US has been the sharpest ever after the Great Recession. You know as well that there is a huge substitution of capital to labor, capital for labor, I mean, basically more capital on less labor. I'm sorry, it's substitution is a different word in French. But basically, it's very important to have competition from robotization and so on. The price of capital is collapsing as well, which is a strong incentive to have more machine and less labor. But once again, I would agree with you on the fact that it's true that more young people are living in the house, but basically if you look at the latest data, there have never been as many people getting married in the US as in last December. We have a new generation also of people, more and more renters, more and more, less and less buyers of home for reasons structural. But there is always, the cycle is always going back and forth. And I'm a strong believer that at one point we are going to hit a low level for unemployment and there will be some recovery. And I think that the good example is clearly the mid-90s, as you said, but even in the US, the Fed went to hiking in 95 because the unemployment was close to 5.4%. Basically, there are much more people that are available to work, so the wages are not reacting because there is still some slack in the labor market. So there are probably, and I believe that there are some strong structural changes going on in the US economy and in the global economy in general. But at the end of the day, part of the lack of responsiveness from the job market on wages is just due to the fact that there is a huge slack in the job market. So it's quite easy to hire people, in spite of many businesses reporting that they are finding difficulties every day to hire some highly qualified people. Yeah. But that's one of the biggest explanations of the wage gap. Mm-hmm. People that are very well educated, and especially in the STEM area, will find some jobs easily, but they won't be paid very well either. I mean, if you look at the average income in people working in California and Google and so on, I mean, it's not astonishing what they're paid by every year, especially if you compare with the so-called slack in this economy.
Let's stay on this topic a little bit and move to China, where we have a question related to this topic. As growth in China slows, does the potential for civil unrest increase? Of course, but the economic implications are?
Wow, that's a very difficult question.
Maybe you just start answering on that topic of, you think that there will be the chance that the civil unrest will increase?
That is, indeed a very difficult question to answer. That is not very well communicated in the media from China, at least. But then, apparently I do see quite some, social unrest in China. There are protests everywhere. It's just not reported everywhere in the world. Is it directly related to the economic growth? Not necessarily. I think, there are other reasons, social that led to social uneasiness. That could be because, of injustice, because of the other things. But I do see, correlation doesn't really imply causation, in my view. So there could be, increase in protests. There can be also, increase, lowering economic growth, but the connection is not really there. Yeah. I think.
All right, thank you. Yes, Peter.
Can I have a go at that one?
Please.
I'm one who believes the Chinese government will never allow social unrest to actually happen. They will take whatever measure they can to keep it from happening. It's a really difficult task. Well, look at history. Every time there has been social unrest, very strong measures have been taken. I shouldn't have done that. So, if you were going to straight predict that out and say, well, that's the only thing we have to go on in the past, so there isn't likely to be any unrest, so how do they get around the unrest? Well, that's what they've been doing for the last 6 years. When you look at trade as a share of the Chinese economy, it collapsed when the world economy collapsed. And that was a huge problem for Chinese authorities. Here's where we come to Hall's theory of political insurrection. It doesn't matter where your economy is at, it takes an absolute number of people to cause a really big problem. And China has a greater amount of those absolute numbers of people than any economy on the planet. So keeping everybody happy across the macroeconomy is a difficult thing to do. But when a macroeconomy starts to slide, everybody gets affected. So how do you control a problem like that? Well, you do what the Chinese authorities did back in 2008. For the most massive amount of stimulus into their economy compared to any other economy on the planet. The average OECD plan was 3.9% of GDP. China's was, any guesses? 13% of GDP. And you add monetary stimulus to that, it was somewhere between 20 and 25% of GDP. And that was only in the first couple of years of the crisis. They've been keeping their economy going on heavy doses of stimulus since then. So, you know, it's already in trade. I think that they've been keeping that unrest from happening, and all the while they're waiting for what? They're waiting for world trade to come back. And my belief is that when world trade does come back, we're going to see a China that looks a whole lot more like the pre-crisis China than what we've experienced over the last little while. I know that's not everybody's view, but certainly how we feel about the economy there and unrest.
We are glad and happy that you shared the whole theory with us. Thank you. One country is mentioned a couple of times within Europe. It's the UK. And if we could finish up with the UK and a little bit the impact on other markets. The UK will be the biggest market in Europe in 10 to 15 years. Will it leave the European Union? European Economic Union.
Can I start?
Yeah, go for it.
Yes, I think Evarist.
So, I remember reading an article on the big data, and they say, is big data a big dud? I would say that the same thing for UK. I think that the UK miracle is absolutely not a miracle. I think that it's over the last few years, of course, you had a strong growth. Last year was 2.8 or something like that. If you have to understand GDP very easily, GDP growth, it's a very simple math. It's a sum of productivity gain times the number of people that you employ. And what is true in the UK is you've seen a very sharp increase. It's close to an historical high of employment to population ratio. So a lot of people are working, so the unemployment rate is very low. But in the meantime, productivity is declining. So that's a very bad situation, because once you've reached a very high level of employment to population, if you don't have a lot of productivity gains, it's very hard to sustain a very high level of growth. On top of that, I don't know if you've seen that, but the current account deficit is tremendous. It's huge. So it's an economy that basically, if you look at the macro side of it, low negative productivity gains plus a huge external account, I don't think it's very healthy. But anyway, what I find very compelling is that so the UK is facing two risks. So this economic risk I just mentioned, and the other one, which is to me even more important, it's a constitutional risk. To put it very simply, you have a prime minister that wants to stay within the EU, but will do everything to be ousted, actually. The reason is the strategy of Cameron is basically to have a referendum, but before this referendum, he wants to try to negotiate some unilateral agreement dedicated only to the Brits. And after that, coming back and say, okay, I've changed the EU, so you can vote yes to my referendum. That's a very risky operation for at least two reasons. The first reason is there are a lot of anti-EU PM in its coalition. And the second risk to me is clearly that it's going to be very difficult for him to get all the requested institutional arrangement with the European Union. In particular, some more independence to domestic parliaments and so on. But the only way you could see it positively, and in that sense I will completely change my view on UK, is if Cameron managed to at least have some concession on two aspects. The first one is basically more freedom in terms of managing the financial sector in the UK. And second, something very important, as you know, is very upset regarding immigration, especially immigration from the Eastern Europe countries that are part of the EU. Basically, this is something that is called tourism benefits. So if he managed to be able if he is able to have some concession of those two aspects of things, then it will be the perfect situation for UK. They will have access to a market, free circulation of goods and capital, And at the same time, they will have freedom in the management of their immigration policy, in their financial sector reforms, in terms of fiscal policy, and in terms of monetary policy. So in that sense, the pure free rider aspect of UK will be very positive for me. But it's clearly not a done deal that it will happen that way. So I think there are some big risks in the UK for 2016 and 17. I will not be even surprised in facing those risks. They will even try to bring forward the referendum in 2016 instead of 2017. So I'm sorry, I'm not sharing that optimism regarding the UK economy.
Well,
not because I'm French and they call us French.
We asked for your opinion.
I try to base my analysis on data.
Yeah. Thank you very much. I would like to thank all my speakers, and I would like to bring it to an end now. Thank you very much for coming here, for sharing your valued opinions and experience. It's always a pleasure for all of us. I want to thank the team of Sue Hinton to organize this beautiful event again. And for you, we would like to have your opinion about this event, about how you liked it, so we can improve year after year. And of course, we have our cocktail reception outside, so you're more than welcome to stay with us a little bit more and ask the speakers all those questions that we didn't have time to share with them during the Q&A. Have a good way home, and thanks for coming.